Good afternoon, everyone. Today's Thursday, November the 2nd, and we're going to do a live trading session. It's been a while since I did the last one, but I was on holidays. I was enjoying Morocco. It was beautiful. Weather is fantastic. But I did miss a few days of trading, and I think I did a little catch-up video over the weekend just to show the account position after the weekend. And the weekend was actually the week was pretty negative in the market. We had few days going down. Actually, all of the time that I was on holidays, the market was going down, but then it started going back up this week, and that obviously benefited our positive delta trades. So we're gonna go take a look at our account, see if we can put on any trades, take something off. I did put a couple of small hedges on while I was gone, then I took them off for a little bit of loss. And then yesterday I introduced a new trade, which is a little bit of a grind down protection trade, but it's not a plain put debit spread as I was doing before. To be honest, I just don't really want to be paying for those put debit spreads continuously, because most of the times they will be expiring worthless, and I took a different direction and put on a trade that's actually financed by the additional put debit spread. I'm sorry, by the additional naked put. But I'll go into details on that trade and see how it looks, and go from there. So let's take a look at the account first. We are actually, let me just take a look here. And the Greeks, I took the note of the net lick. We're up at 50,000 and 100, which is pretty close to our all-time highs, which was 51 and change. So we're going in the right direction. We were down a little bit, but that's to be expected. We didn't have any of those grind down protection trades. Actually, we did have a couple of put debit spreads, which I closed for a little bit of profit, not much, but a little bit. And okay, that's fine. But let's see first the open trades. So this here shows 60% profit. That's too soon on this one, 50 on this one. Then we have naked puts here, none of which is showing 80%, but some of them are getting close. So that's right here. And then on this one here, we have 28%. But those are newer trades. Maybe something in the older ones, which is right here. This one is at 60. And remember, we're only looking at the naked puts percentage profit since open. We don't care about the put debit spread. That'll probably stay open regardless. We're just looking for 80% profit on this one. And then we are closing it 60% on this one, 20% on this one. And then we have the oldest ones, three of them right here, 78, 79%. So this one is getting ready to be closed. And 73, 68. So the rest are put debit spreads, and a couple of more naked puts down here, 61%, 47, 39. Okay, so on the closest one is this one at 79. Let's take a look. Let's start by doing our Greeks and ratios. So just to see where account is at the moment. VIX is at 1606. So you can see the VIX came down a lot since last week, from close to 21 down to 16. Obviously, we are getting paid because we are short volatility, so we're getting paid here. And delta 98.77, 98.77, and buying power usage is at fresh. And remember, we are only concerned with MES, and that's at 31.4. 31.4. See, that came down as well over the last few days as the volatility came down. Buying power did so as well. We have 18 trades open. We should have around, we are just a little bit over our metrics. Now remember, these metrics are just for putting the new trades on. We're not concerned with the buying power going over this once the trades are open. We're just not adding on new trades, and this is to avoid any blow-ups once the VIX jumps. we don't want to be overexposed. 37.78 is our premium sold, total premium sold. It's right here on the naked puts. This doesn't account for the put debit spreads, just for the naked puts. All right, so given this, so we're not going to be putting new trades on today until our buying power goes down or something else changes, but we might be able to take something off, and that's the one that we were looking here at. So 79.80, we have plenty of trades. I know tomorrow the market might continue to go up, and we can leave some money on the table, but I'm not concerned with that because we have other trades that will be profiting, and we might be able to put on another new trade. Okay, so let's put in a closing order for this one, and let's close it at 80% here at and do a full one. So 4, we'll just leave it working, and then it might close or might not close. We'll see. Because these are getting closed, actually we can put this as well here, and so we don't have to really watch the market continuously. Let's see this one. This one is at 68. Let's do this one as well. Close at 80%. All right, so that's fine. Okay, so these are working now. Okay, let's take a look at this grind down trade. This is the one right here, and what it is, it's 2 put debit spreads at around 60-day. This is 57. We opened it yesterday at 58, and they're 50 wide each, and it was around 25, 26 delta with a long put, and then we financed that with a single naked put a little bit further down from the put debit spread at 39.75. And if you take a look at, we're gonna try and put a fresh trade like that on today, because this one is gonna be now different than it was yesterday. But we're gonna put the fresh one on just to show you. But the beauty of this trade is that even if the market goes straight up, it doesn't cost us anything. We are actually, as you can see here, we're slightly profitable because there was a little bit extra money collected on that naked put. Now, I'm not doing this trade to collect much extra money on the naked put. I just want to make sure that that put is as far away and has a far away break-even point. So that's my main concern. If there's a little bit of money left over, that's fine, but not too much. So we just want to pay for the put debit spread. And now we did 2-2-1. We could do 3-3-1, 4-4-1. Doesn't really matter. It changes the dynamic a little bit because of the strikes that have to be chosen to achieve this. But all of them work on the similar principle, and that is that they will provide some negative delta towards the end of their life. They start off slightly positive, and they will benefit if the market grinds down slowly. And with our 1-to-1 trades, we have a decent protection in a larger pullback, but we don't have an income producing portion like a classic 1-1-2 would have with a put debit spread closer to the money. So I'm adding these trades in addition to 1-to-1s solely for a grind down protection, not protection, but for grind down income. But we also don't want to be paying for them continuously. So in this way, we financed everything. If the market continues to go up or stays around the same area, we're just going to be collecting few dollars for that that was left over after paying for the put debit spreads and commission. And if the market goes down, we're going to show a little bit of profit. But then if the market goes down strongly, then we would start to get hurt, but not too soon, because the break-even point is pretty far down. And I'll show you this trade right now. Let's go here. And okay, so this one filled the trade for 80%, and we're going to put that later on in our table. And let's go here first. So let's go to closest to 60. I will be playing with these parameters and maybe going, and shorter DT, longer DT, maybe different deltas. we'll see how it works. I'll do some back testing, but for right now, let's say that I'm doing some liquid strikes around 25. So you can see here open interest. It's an indication of the liquidity. So maybe 4,200 round numbers work the best. So if we go here and then let's go 50 down. Okay, there's a little bit of interest here, and we do this twice. So we see that each put debit spread costs us 860, around 860, 850. So we would need just under 20 to pay for this and commission. So we're looking for a single naked put that's a little bit over $20. So right now it shows maximum profit of 414. That would be if both of these end up in the money after at close, but we might not be waiting for max profit. We might be closing this at some point sooner, but let's put on the let's see, something around 20. Let's take this one here and change it to one trade right here. Okay, and then let's take a look. So we're getting a net credit of 645 times 5. That's just a little bit over $30. Commissions for this would be five contracts in total. That's around $12, $13. So there's a little bit of extra money on here. So we could go a little bit further down to get further away, but we can also just leave it here, so we have a little bit of profit just for putting this on and locking up our capital. $520 in buying power is locked, and let's take a look at what it looks like here. So we remove all of the other trades and just leave these three. Let's make it a little bit smaller and take a look here. Okay, so here's the trade. Yeah, so as you can see here, the break point is all the way down at 39.18, and well, roughly, let's call it 39.25. Let's do this. So 39.25 divided by 43.71 gives you just 11%, roughly 89, let's say 90, 10%, with 10% below the market. So the market would have to go down 10% for us to start losing money. This is if we wait until the end, but my plan is not to do that. My plan is to have a stop loss. I'm just working on the mechanics so that it can make sense. If the market starts going down really quick and really hard, we will start to show loss, and we can go here, take a look at, let's say, a couple of weeks from now. Let's go even more. Let's go 3 weeks. And then if the market goes down and the volatility goes up, then we would have a little, we would start showing loss at some point here. But, depends on how fast the market goes down and how high the VIX goes. We might be able to still collect some credit here and actually close for profit. And if the market goes down slowly and starts getting close to our put debit spread towards the end of its life, and then we might be able to show some profit even if the market is going down. And so that's the trade, and it could be different. This could be, as I said, this could be 3 put debit spreads, but then the naked put would have to come closer here, and it would work as well. But it just depends on what we're trying to accomplish. For right now, doing some back testing and things like that, I think I like this structure best for what I'm trying to accomplish. So that's on that. So we clear that, and let me see. Just let's go here and let's close this trade here that we should, number 4, right? We closed it for -4, and then this is gonna be 211.23. So we had a nice $98 profit on this trade. And you will notice that with all this market movement down, we didn't lose a single trade. we didn't have to close anything for loss, even though the market, let's see if we take this here, from the peak in towards the end of July to today here, the market, oh, I'm sorry, to the lowest point, we're talking about over 10% pullback in the market. Granted, it didn't happen in a week, it happened over a couple of months, but still, it was a 10% move down, and we didn't have to close a single trade for loss yet. And it looks like we might be able to close a couple more pretty soon if everything continues the way it is. And so this is good. This is great. We have now 17 trades open. And if we go back here and correct that here to show 17, we're going to be fine. Just as I would have to now correct as well the capital required, refresh, and now 28.6. 28.6, that goes right here. There you go. So we are right where we should be. We could be putting on another trade, but it's not necessary at this point. So we'll maybe wait tomorrow and see if we can put on one tomorrow. And let me see what else. Theta, we are not, and I mentioned it a few times before, we are not concerned with Theta. We just monitor it. We are selling premium, so we technically always have Theta, even though sometimes it doesn't show the way we would like it here. But let's see. So premium sold now is, as you can see right here, 35.78. 35.78. And remember, this is now my primary measure of exposure, this and the buying power. So we want to get close to 10% of the net lick. And this is because we, I think I have to do a separate video on this, but basically with our stop losses, we want to be exposed up to maybe a 20% drawdown in a worst case scenario, not involving a black swan event, just a strong pullback where we have to close all positions for with a stop loss. We want to be up to 20% drawback. So to achieve that, we want to limit our premium sold at 10% of the net lick, and I think I will be including the premium sold to finance those puts, the trade that's 2-to-1 trade, because there is a naked put there which contributes to this premium sold. I think I just have to do some adjustments to the spreadsheet, but I'll be including that as well, so that we are always exposed the way that it shows our exposure properly. So let's take a look. Negative delta trades. Let me just see. So I closed a couple of those little hedges that I had on because of the holidays, and the final loss was $42 on one and $77 on the other. So a little bit over $100 lost on, and actually there's another 94 that I put on the 20th, 24. So those are all closed now, and the only negative delta trade that we have at the moment is put debit spread. That's pretty close to max loss, and the new trade that we put on yesterday, that where is it? It's gonna be here. I'm sorry, it's here. It's the one right here that I was talking about earlier. So that's all. Let's see what tomorrow brings, and thank you for watching. I hope you liked it, and if you did, please like it and subscribe it, and I'll see you in the next video. Thank you. Bye.